Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. We've got a CPI coming up, so let's get to it. Adjust my microphone here a little bit and come over to our charts just to take a quick look at what's been going on. Treasuries taking another little bit of a stumble yesterday. I mean, they were already kind of to the downside when we left, but they kept kind of going even after the auctions a little bit. So it seems to me like maybe some of the supply coming into the market is depressing prices a little bit, but I also think a lot of it was the Japanese yen yesterday. Now the S&P 500, another like big ol' ramp into the close, but those gains were like quickly erased after the close. So yeah, that's a mess. Oil moving a little bit higher yesterday. Gold and silver still looking good. Silver, another big jump overnight. Silver is there has got to be some big shorts covering over there in silver. I'm kind of enjoying it because I own a little bit of silver. Copper down a little bit overnight, and then we got to come over here and look at the dollar. Maybe we should be looking at the dollar first, but the dollar down a little bit from yesterday. Bitcoin on a little bit of a run this week. I'm a little concerned anytime that we get a run like that in Bitcoin. And not, I shouldn't say anytime, but as of late, when we get moves like that, that usually means that like they're pumping it up ahead of bad news that's going to come out later, you know? My bad, forgot to speak English, and it's totally, I understood what you said. I understood what you said. Okay, so for the news, let's make sure that we've got the squawk on here. Big number that we're looking for is U.S. core CPI month over month. We're looking for a reading of spot 4 versus a reading spot 5. And by the way, the Goldman Sachs estimate is a reading of spot 3.7. So we are anticipating that this news will be fairly in line with the estimates. That said, there probably will be a pretty decent amount of movement afterwards. And if there is a surprise, this could be a 2% move in the S&P 500. So watch out. I got a little bit of oatmeal I'm going to try and stuff in my face here before the news. So I will go quiet here for a little bit as we wait. All right. 20 seconds. Okay. So I'm getting core in line. Core month over month in line at spot 4 versus an expected spot 4. And US headline CPI month over month spot 1 versus an expected spot 2. The Treasury really jumped up on that. I'm not sure if that is warranted. I'm not going to unlock my account here. I am going to come in and look at the crosstabs. Consumer price index for all urban consumers rose spot 1% in March on a seasonally adjusted basis after increasing spot 4% in February, the U.S. Bureau of Labor Statistics reported today. Over the last 12 months, the all items index increased 5% before a seasonal adjustment. The index for shelter was by far the largest contributor to the monthly all items increase. This more than offset a decline in the energy index, which decreased 3.5% over the month as all major energy components indexes declined. The food index was unchanged in March, with the food at home index falling spot 3%. The index for all items less food and energy rose spot 4% in March after rising 5% in February. Indexes which increased in March include shelter, motor vehicle insurance, airline fares, household furnishings and operations, and new vehicles. The index for medical care and the index for used cars and trucks were among those that decreased over the month. The all items index increased 5% for the 12 months ending March, and this was the smallest 12-month increase since the period ending May of 2021. The all items less food and energy index rose 5.6% over the last 12 months. The energy index decreased 6.4% for the 12 months ending March, and the food index increased 8.5% over the last year. Okay, so I want to point out something really key I'm noticing in all of that is that the shelter index for shelter was the largest contributor to the monthly all items increase. So we know that the shelter component is very lagged, right? So we're gonna see that shelter component come down a lot more. So when I just look at the expectations and everything, I'm like, that's in line. I don't think that I should see a big jump up on that. Maybe I should sell it, sort of a thing. But then when I go into the crosstabs, I go, no, this is warranted, because if you take the shelter component out, we are getting like that deflation. Like we are getting inflation moving back into in line with the 2% target, if not below it now. And that's the Treasury's bid. It was a very strong jump there though, wasn't it? Let me see. Let's come back over here. Okay, it's not like the biggest move that we've had recently. I guess I should say that that's about fair for a CPI number. There could be more here. It is a little volatile though, so it's a little volatile. We could see some pullbacks. I think I got to be careful. I don't think that I want to trade this initial action here. Yeah, oil moved up quite a lot. Oil moved up almost $1. The S&P 500 is up about 30 points. Okay, so my new squawk is telling me that the probability of a Fed rate hike in May has decreased to 60% from 70%, or somewhere around about that. it seems more uncertain in my mind than 60%. Well, they're still kind of pushing to the upside here, though. We got a good pullback, but it was very, very brief. I could try participating now. This is going to be a little wild ride, though, man. I feel like I could maybe get from 336 to 335. It is slowing down here, but it does look a little stuck in the mud. Another thing that we need to consider is that we do have what is it, 10-year? Yeah, we do have 10-year note auction today. Oh my gosh, come on. Wow. See that bid in the 5-year at 14 half? Wow. Are they going to be able to touch it? Come on, let's see. This could be interesting. They touched it. I think that they're going to have to clear it. Okay, they cleared it. Yeah, they're pretty nonchalant about it, but they did fall through. Look at that. So the concern I have here is the auctions have kind of been depressing prices, I think. The Japanese yen has kind of been depressing prices. Is this enough to flip all of that on its head and us start moving back up again? I'm a little skeptical. And the amount that we moved there, you know, washed out almost all. There's still a little bit. There's still some single prints, a little bit of single prints on the upside that they didn't touch, but they're wiping out the last like 3 days of downside. Man. It's been a long time since I've seen one of those where a strong bid shows up somewhere and there's a collision and it just completely reverses the price. I think we would have to call this a pullback, but still pretty good little aberration there. Why is trading? Yeah, so if you are using TradingView and you have not paid for, so if you get TradingView Pro and you pay for CME market data, then you can get live data through them. But by default, what you're getting is 10 minutes delayed. Well, they came back to my price. Yeah, just popped. Yeah, so it's definitely a 10-minute delay for you. Okay, so I see the liquidity here in the micros has come in a little bit. There is a little bit of trade going back and forth here. So it seems like there are some retail traders trying to play this area. There's a little bit of volume both sides here. 10-year. In dimes. I should say dimes because 10-year sounds like tenure and take advantage of this arch. Okay. That was not necessarily the best fill. He's kind of holding the spread against me now, and the spread is actually increased. That's not what you want to see. And a little bit of shoving here. I think there's a bit of profit taking going on up here. Because I do see the cumulative delta shifting a little bit here. Okay, cool. They're able to recover O2 half. That's good for us. And there's definitely some orders going through in the micros. The 30 not responding as well to these, so we're getting a steepener. Okay. Well, one thing I'm noticing, it doesn't seem like it matters which way it's moving. The liquidity in here seems to be tracking pretty well. Okay, not so much there at 03 half, but for the most part, when we tick up or down, they're able to get, 600 contracts or so. So the market makers seem very, very active in this market. In this location. Now for the micros, it's a little bit different. They're still okay. Well, the spread has come in, so that helps. Okay, I'm getting some clicky here. What's that? That sounds like that's coming from the S&P 500. the price movement here in the treasuries is really consolidated. We've been around this 0.2, 0.1/2 area for quite a bit now. I don't know. When we were moving up, I thought it looked okay, but like, look, the cumulative delta still continues to look like profit taking. This area right here at 116 even would maybe perhaps have been a better place to try and play it. Feeling a tad bit nervous here. This is very quickly moved against me. In exactly the way that I was concerned about too. And I've got some concerns for the liquidity conditions here too. Fuck. Okay, well. Okay, volume maybe stabilizing a little bit. So overall, I'm going to say bad trade. Because I was really only looking for like maybe 10 or 15 on that, right? So for it to have gone as much as it did against me is definitely not what I want to see, right? Thought there was a little bit more juice in it than there was. I think we could have guessed that the CPI was going to be lower because of the lower PMI and interest hikes. So I think that the market got the numbers pretty darn close. I wouldn't necessarily say that the CPI was lower. I mean, it was, but it was very close to the expectation. So the thing that we would have wanted to have predicted is what the market reaction would have been to inline numbers. we got a much stronger reaction in buying than I was anticipating on that, right? But again, the thing that I'm singling in on is that the majority of the inflation component right now is coming from housing, and we know that that is very lagged and is declining. So overall, that's a big boost for overall it really suggests that inflation is not as big of an issue anymore, right? I think that the market is probably going to quickly shift into a market where the growth matters the most. I mean, we're kind of already in that, I guess, and this just kind of cements it, right? Like numbers like PMIs are the most important numbers right now, I feel. Okay, so returning back to 0.5, basically we've kind of got a little bit of gravity here because of the amount of volume that we traded in this area, and it seems to push them back into the center of that pretty easily. And some of the bigger orders and everything are passed, so we'll see. Let's see, it's been about 20 minutes since the news. I don't know, it's still moving quite a bit though. That may be movement from correlated instruments. You know, in this kind of action, it's kind of hard because there's just so much going on. But the Japanese yen is moving along with us. The dollar is moving. The dollar took a decent hit, right? That was like 70 cents. Yep. Okay. So now it's really starting to show it. So before, when we ticked up and down, there was pretty healthy liquidity following it. Now I'm seeing a lot more pulling, right? Like right there, 0.5, 252 contracts. Like when they ticked down, they pulled. 0.2, they pulled, right? So the latent liquidity is starting to show some signs of stress here a little bit. In other words, there is not as much latent liquidity at this 0.2, and that's why it's settling in there. Right? Let's see. I never really checked Twitter, so better Mohammed A. El Arian, better than expected headline inflation, but stubborn core headline rose by spot 1% in March below the spot 2% consensus. He's not really saying. This leaves a finely balanced May Fed decision. I am really uncertain whether it will be a hold or a hike, to be honest with you. I can, because of bank stress, you know, I can very much see the case for holding off. So it doesn't seem like inflation is like really a huge concern here. Okay, so interesting. They did push down here, and there was some big orders at 116 again. And once again, some apparent movement in the Japanese yen along with it. Why do you think the dollar is going down besides lower / speculated inflation? Well, so I think that the thing here would be, so I have to start out by saying that I don't think that I necessarily always have a good handle on why the dollar moves the way that it does. The correlation that we've been seeing is the dollar moves down and the treasuries move up. So I can kind of turn around and say, well, I know that the treasuries moved up because of this, so I should expect the dollar to be moving this way. Is kind of the main way that I'm going to be, you know, if you had asked me which way would the dollar go, that's how I would have figured it out, right? I think right now there's some concerns about the U.S. economy compared to the rest of the world, because the European economy is not seeing as much of a slowdown, right? So that's going to hurt the dollar. That's one way that could hurt the dollar. On the other hand, this is kind of like a risk on move, right? This is saying the Federal Reserve won't have to raise rates as high. We can stimulate, you know, we can stop taking money out of the economy. That's overall bullish, especially for stocks. And so what you tend to see in that situation is the dollar depreciates. Right? People go into the dollar when they're scared, and they come out when they want to take on risk. So that may be the primary, like, speculative flow in the dollar right now. Yeah, I don't know about that one. Bob Elliott says it's pretty clear that inflation will remain elevated relative to the Fed's target and growth will slow further. It is unclear how the Fed will respond. That trade-off is about to be tested for the first time. Most will be surprised if the Fed chooses to prioritize inflation. Well, I feel like we should tweet, shall we? What about that international currency that some countries are trying to bring up for international trades? I don't think that is a large enough flow to really have a significant impact on the dollar. I think that it's way overhyped because there's a lot of dollar bears out there, right? It's a lot of really loud dollar bears. On that one, at the moment, I would that makes me on the lookout for, like, squeezes, right? So like, overall, based on the numbers that we're getting and the way that things are going, assuming that the economy doesn't go and the stock market doesn't go into a complete panic, I would anticipate that the dollar would decline a little bit, right? But it's a good chance that the economy does kind of start to go into a panic, like kind of like an anaphylactic shock sort of a thing. And there's a lot of speculative shorts in there. So I would have a very, very difficult time feeling comfortable with a short on in the dollar. It seems like it's susceptible, you know? Well, they've been rotating between that like 02 and 116 even, which is a fairly large range for the treasuries, but reasonable given the liquidity conditions and the news that we had and the amount of movement and so forth. It doesn't seem like, well, I shouldn't say it doesn't seem. I think that getting much above this 02 half might be difficult. Why is oil going up if inflation is lower? Yeah, I'm a little surprised at how strongly oil reacted. I think that's a good question. I mean, if the overall move is, you can think of risk on, risk off, okay? So we've been in such a complicated situation where the data has been so confusing and we're like really questioning everything that the flows have been really complicated. Most of the time, you can categorize all flows as risk on, risk off, right? And so you could say that we're experiencing a risk on flow in the market today, and ergo, oil is buying, right? It may just be that simple. It could also be, moving in correlation with the ES. That might be another way of putting it. Is well, if they expect the stock market to do well, if they expect the economy to do a little bit better because we're not as concerned about inflation, then that means that oil demand will be okay, and so we can continue to see oil move up. Right. Bank of England's Bailey has been speaking this whole time, by the way. At the top of the hour, which is now, we've got Barkin. Let me check here. It's not on the Forex Factory calendar, so I can't say what the event is. It might be like on TV or something. So apparently Governor Bailey is speaking about stress tests right now, saying, well, it won't always be able to deal with like black swan events. Yeah, but don't you think that they should deal with like the interest rate cycle, like the most common, largest flow in the market, like that? You don't think maybe? Well, there was a little bit of a drop there in the 30-year. There was a big sell, they held, and then they slipped. So there was, I didn't see it as it happened, but there was an iceberg in here somewhere between 29, somewhere here between 29 and evens. There was an iceberg. They traded through it and everything was fine, and then they slipped. And that's why we kind of got slammed down. Oh, that's right. We get Bank of Canada today in an hour. And those some of those Canadian events have been affecting the market more than we'd like lately. So we have to consider that one. Okay, interesting. A large offer has appeared at 30.5. Only briefly there. Let's see here. They added 3,000 and then 1291 pulls. That's interesting. Yeah, completely pulled at 30.5. That's suspicious. 166 to clear it? Come on. Stop toying with it. Still seeing retail trade go through down here. There's a lot of liquidity now all of a sudden. That's a little odd to me. That it seems so thick. The micro. Like that's unusually thick. You can see there at 30.5. Well, they're able to trade through it and everything, but like it's being a bit finicky there. It looks like we've retraced all of the delta from before the move now, by the way, as well. So hopefully we've got the profit taking flows out of the way. If we continue to see some selling, then I've got to start to be like, okay, something else is going on, like the demand for the auction isn't very good or something like that, right? That 30.5 sure pulls easily. Okay. At both 30.5 and 31. We're starting to get into the time period where we should expect the book to be fairly recovered. So I find it curious that they're dancing around those prices as much as they are. But that means that if we were going to see another meta order, we could start to see it coming in now, right? Okay, so I was looking at Fed Barkin's speech. Apparently he doesn't say anything about economic policies, so we don't need to worry about that one. thinking about how I got myself into this situation, and I definitely feel like I was a little bit too hasty to try and get in. You know, I could have waited a lot longer and gotten a better idea of where the ranges were to position myself better at the very least. Was like really all three of these ticks here, they're able to the bids and offers are pulling basically. I guess in this situation, it's really the 30-year that we got to keep an eye on, because they can't seem to hold that 25, right? Okay, interesting. There was a little stack there at 30. Not a huge one, but big enough to show up on my filter. Big enough to show up on my depth tape. Still no trades at 26 in the 30-year though. And maybe I was thinking about the spreads here. We definitely steepened through the news, right? But, okay, so now there's a big stack at 25. Okay. The liquidity building on the bid seems a little bit better now that we've moved up. At least moved up to the 116 even, right? And rates definitely responded because the 30-year is recovering that little slip down that they had. So, I still see some signs of steepening. Like you see there's like this consistent selling over here into these bids in the 30-year. You're gonna buy the 5-year, sell the 30. If you're gonna steepener. If you're gonna go for the steepener. Some decent volume on this little up move here in the 10 in dimes as well, by the way. So we are starting to get flow in line with a second leg meta order. DC Verex pointing out that Governor Bailey said, "I can't rule out the need for a central bank digital currency." Yeah, I kind of read that as that's not my area of expertise. I wouldn't read too much into that comment. I tell you what, it's sure interesting how over the last 6 months or so, the public interest in the central bank digital currency thing has gone awry, right? It's an interesting confluence because the Bitcoiners don't want it because the central bank digital currency would just be death for cryptocurrencies, right? You have a cryptocurrency that gives you all of the utility that you had with Bitcoin, right? But it's controlled by the government. What do you need Bitcoin for? But then there's also the, there's libertarians, conservatives, and rights advocates on the left, even that all have reasons to be concerned about the issues of privacy and other things associated with the central bank digital currency. Wouldn't guarantee that sort of thing would have to happen. Who knows how it'd be actually. Okay, so what the F is going on here? Okay, so there was a large offer at I think it was 116.01, and then we started seeing like strong stacks, and it came all the way through. I'm gonna take a picture of this and put it in Discord. That was weird. Was it really spoofing? I don't know. So there was a 25 lot that moved like 4 ticks. I think that there may have been a collision there, though. I mean, there was volume traded, so maybe you had a big buyer and a big seller saying, "Oh, you're there? Okay, well then let's do our thing," and they did it. That is possible. I am kind of inclined to call it spoofing, though. maybe that's just my bias. Okay. Anyways, what was I saying? Oh yeah. So there's lots of people that don't want a central bank digital currency. I don't know what's gonna happen. If the government did it correctly, I'd have no problems with it. But I am not confident in the least bit that they will do it correctly. Okay. So Trading Bunny said, "Sorry, what do you mean by steepening?" Okay. So when the yield curve is where's my tool here? So when I'm talking about steepening or flattening, I'm talking about yield curve. So typically a yield curve is drawn like this, where you've got, here's the percentage and here's the year, right? And the 2 years have like really small amount, and the 30 years have a really big amount, and that's how much yield you're getting for each part of the yield curve, right? So when we're flattening, that usually means that those short-term rates are increasing, right? And when we're steepening, that usually means that those short-term interest rates are declining, right? So I have a way of kind of sorting that all out. So when I have my charts and I look at the spread in my charts, moving up is steep. Up is steep, down is flat. Okay. So we can see that since the news, especially in the knob spread, we have steepened considerably. Okay. What I will see in correspondence over here is like this, where the 5-year moved up more than the 10 than dimes did, which moved up more than the 30. Okay. So what are we seeing right now? Actually, little bit of flattening. So that steepener is mean reverting a little bit, right? That steepener is mean reverting a little bit. So that's what I mean by steeper, flatter, is I'm trying to sort out, okay, it would be better if things flatten for me, right? The more that the 30-year moves, the more that my instrument is going to move, because it's more sensitive to the long end of the curve. It's not about the currency. It will be about the population having a direct account with the Federal Reserve and limiting the need for local banks. I don't think so. Okay, so this is a point worth discussing. reversion to a VPOT counts as we're just talking about reversion in the spread. I'm not so concerned with the volume point of control. So if you haven't watched my video on proven market behaviors, I would go and watch that, because I kind of get into this, the empirical properties that we've proven. So there will be areas of lower latent liquidity where price kind of gravitates towards. Basically, price tends to fall at where supply and demand are at their minimum and meet each other, right? And so that area very often becomes a point of control. But I'm not looking for, it's the point of control for the session, or what. I don't look at it from that perspective, because I need to see it like as soon as it starts to happen, right? So yes, there does appear to be there has been a little bit of a liquidity hole in this area. I think we're past that. It's been long enough that should be filled, and that's not necessarily the biggest factor. And especially since we saw like that big spoofing and collision and all sorts of games being played in that area, I don't know if that's necessarily the biggest factor behind the current liquidity conditions. Okay. Okay, so I do not believe that the Federal Reserve's intention is to get rid of the banks. So here's the thing, is if the Federal Reserve had a central bank digital currency, then everybody could have their own account, and they wouldn't have to hold an account at the bank, right? So, and if the Federal Reserve needed to inject some liquidity into the economy, they could just put money directly into people's bank accounts, right? Now, I don't know how that would actually, I think that would have a psychological impact on people that might not necessarily be the best thing for the economy, okay? But that's one of the ideas that's been out there, and people think that that's what the Federal Reserve wants to do. I don't know. I feel like that the Federal Reserve is still kind of a little bit uncertain and agnostic about this whole central bank digital currency thing, okay? But they definitely don't want to be replacing the banks, which is to say that if we had a central bank digital currency, you might be able to have your own wallet and not hold a checking account at a bank anymore. But if you want to get a loan, you're still going to get it from the bank, okay? Because the Federal Reserve knows that they are not capable of making the right investments in that area, right? We have the banking system for a reason, and the Federal Reserve understands that this is very important, that who you give money to matters, right? But because the system doesn't work if they don't pay the money back, if they don't go and use that money to make good investments and then pay the loan back, right? That's why you need regional banks, because the regional bank is more knowledgeable about the economic conditions in the area and the reputation of the borrower and all of these sorts of things, right? So they don't want to do away with that. And remember that the banks are, all hold like positions in the Federal Reserve, right? So they're not going to get rid of the banking system. Now, big banks and not Mickey Mouse banks. Well, I think there are some politicians, they might not realize it consciously, but I think there are some politicians that kind of, they want the regional banks to go away, for sure. Like seriously, okay, so you just had an issue where the regional banks aren't making very much money, and it's putting strain on them, and as a result, deposits fleed. Okay, so what are you going to do about that system? Hey guys, I know. Let's put more regulations on them so that it's even harder for regional banks to make money, and there's even less reasons for anybody to put their money in a regional bank. Makes no sense, but that's what the politicians are doing. Well, and especially politicians on the left. Now, I think really it's about, we have to come up with an excuse as to why it was not our fault and it was the Republicans' fault. Okay, but on the same token, there are people on the left that would love to just nationalize the banks, right? And hey, if it got to the point where there was really only 4 major national banks and they did basically everything, and the government, had them under such strict regulation, at that point, how is that not just nationalizing the banks, right? You're doing everything except for nationalizing the profits at that point, right? So it will also enable them to program what we can. Well, you don't know that, right? Because that's all depends on the specific implementation. And that specific implementation, I think, would have to be approved by Congress. And do you really think that Congress would sign off on a digital currency that allows you to limit what you can spend your money on? I don't think that one could get through. So I really feel that one is a what is the word? I don't believe that the fear around that one is justified. Very unlikely to happen. How I don't know. I have some cash. let's just say we have some cash. That seems like a question that you shouldn't really tell strangers. Oh, I hardly ever do real business when in cash. Yeah, I would say that most of our business is done digitally. Yes. Man, I feel like, well, we've danced around here a lot. They keep coming back to that 31.5, and I don't like that the 30 years popped back down. Then why else have a digital currency if... okay, so I don't think that's the case at all. No. So what's the difference? Well, in order for me to transact digitally, I have to put my money in a bank. I have to get a credit card created by Visa, MasterCard, or American Express. And then the vendor that I am dealing with has to be on the network for that card. Right? If there's a central bank digital currency, then everybody can hold their own wallet and hold all of their money in that wallet. And you would not need a bank account unless you were doing savings or loans. Right? How do you calculate that in real time for the indicator? It's basically just the front month minus the back month. So front month times a multiplier minus the back month times a multiplier. And you can go to, there's a page on the CME about intercommodity spreads that tells you what the correct ratios are. Is not being able to transact digitally because of a merchant is out of a network? No, but it is an issue that you frequently run into if you are a merchant looking to start out, right? Because if you want, like, let's say that we decided to start a food cart, okay, how are you going to do that? You're going to have to go get Square or whatever. Or let's say you're going to start a national chain. You're going to, you could do the Square, but you might go and get, you might pay to get access to Visa, whatever, right? You have to get access to the thing. and you have to get access to the banking. And for you and me, that might not be a problem to get access to the banking, but for some people in the country, that actually is a problem, right? And especially when it comes down to like bank fees and there's all sorts of other problems with banks. It would be nice to be able to transact digitally without having to have a bank account, right? That's the primary utility that comes from it. You're taking all of this infrastructure that we have in our economy today, and you're making it free. Yeah, but you have to pay for it, right? Like Square doesn't do it for you for free. Well, I think it's long overdue that I wait, what the hell? It sucks. I was in that for probably too long, but I'm seeing too much selling here. So the reason a government would implement a CDBC is solely to make, yeah. Dude, you realize how much that it actually is to the economy? That if there's a little bit of a skimming off the top of every transaction that you get rid of, that's a meaningful improvement in the efficiency of your economy. 100% they could do it. There is a benefit to doing it just for that. So let's come back to the real concern here, right? Which is that a central bank digital currency would be used to exert control over transactions that the government doesn't have with cash. Okay, so number one, the government already has that control. Okay, like people get cut off from the banking system all the time. And by the way, it's not the government that gets to decide if you have access to that banking system or not. It's freaking Morgan Stanley or Bank of America or whichever bank it is that you're going to, right? They can just say, oh no, we're not going to transact with you anymore. And this has happened to many people. This has happened. It happened in a big way in Canada with the truckers, right? They just cut them off from the banking system. Okay, so number one, that can already happen to you. Okay, but number two, this all depends on how you implement the digital currency, right? So if the currency doesn't have mechanisms in it to allow the government to take money out of your wallet if it chooses, or whatever the deal is, right? Or the way that the law is set up, because you probably need to have like anti-fraud measures built into it, right? But there's going to be laws around when the government can do that sort of stuff, right? Do you really think that Congress would allow a change to our currency that would allow for that much abuse? Not that I have a whole lot of confidence in Congress, but the way that Congress is currently constituted, there is no way that a currency like that would get through. No chance. You already have a social credit system, dude. But again, how are you going to get that through Congress? How? The Republicans, there's no way that they're going to let that through. Right? It would be filibustered in the Senate. There's There's no way you would get that large of a consensus, right? The only way I see a central bank digital currency being enshrined in law through Congress is if it meets all of the same privacy and protections that cash has. Now, that's where the real problem comes in, right? Because digital currencies aren't really private. There's Monero, but it's kind of questionable. It's kind of questionable. I don't think that this does this very well to make transactions anonymous and stuff, right? Like the whole thing is, yeah, you can see like every wallet and every transaction that happens. So how do you make it private? I don't know. You might have to say, well, you can still use cash, but this particular thing, if you use a currency, it's not necessarily private because it's just the way the technology works. Maybe you could say that. Rules change, yeah, but how is that an argument? Because any rule about cash could change too. But so you think they will change the rules in Congress to get a central bank digital currency through, huh? I don't think that they listen. They don't even have 50%. They wouldn't even have 50%. If I went and I created a bill that was, we're going to create a central bank digital currency. This currency has the ability for me to limit your transactions in certain ways. It allows me to track how much your carbon usage is and prevent a transaction if I think you're using too much carbon, for instance, right? And that's all put into the law, okay? You might get like five representatives to vote for that. No, I'm not the Luke Skywalker of normalcy bias. I understand the political system and I understand the current composition of Congress right now and what they support and don't support and what the public supports and doesn't support, and I know how unrealistic of a scenario this is. See, what's really going on here is that, let's take a step back now. Now that I feel like 5 years ago, you'd probably thought they'd never indict a former president. That's not true at all. Because, I mean, that's been the path that they've been on for a while, right? That one I kind of feel like was inevitable, to be honest with you. No, let's try and I want to try and take a step back and try and approach this from like the high level, okay? The red pill, okay, and there are like they talk about the red pill and dating for guys and all of that, but there's a larger red pill to all of this, okay? The larger red pill to life is this: humans are much more prone to human nature than we want to believe. People on average do certain things, okay? So women on average will go for the tall guy. That's just what they do. Guys on average, if they have an opportunity to have sex without consequences, they're going to do it. That's people. That is just like our human instincts, our normal human behavior. People tend to behave in certain ways. The rich have always known this and have always taken advantage of it to the detriment of everybody else. But what has happened recently is that these kinds of oddities about our human nature have been weaponized against us in the form of social media, right? I think that some groups have suffered from it more than others, okay? But one of the things that happens as a result is that there is a large amount of social media content that is crafted to try and outrage and or concern you as much as possible. And so one of the things that seems to really get people right now is the idea that the government could take control of money. The idea that a central bank digital currency is a Trojan horse to totalitarian control over the monetary system. Okay. And I'm just telling you, like, why does this get popular? Because people respond to it on social media. Why do people think it's going to happen? Because it scares them. But the reality is that there is nothing about the composition of Congress and who supports what and what would actually be in a digital currency to suggest that you would be able to get such an abusive central bank digital currency imposed through Congress in any shape or form. There's no way that they would get even close to a 50% majority to pass a sort of thing like that. Right? Now, if you craft a digital currency and there are rules that say, like, the government can't take the money out of it unless they have a court order, which is basically the way that our monetary system works right now, right? They can't touch the money in your bank unless there's a court order, right? And there was privacy involved in it. And that's the big one that, I don't really see a really good implementation of a digital currency that really ticks all the boxes on privacy, okay? If you got all of those things together, maybe you could get it passed, but then at that point, it wouldn't do any of the scary things that you're all worried about. It just wouldn't. Yeah, sorry, it's true. Women go for tall guys. Yeah. I tell you, this is one of the things that just always bothers me. If you can't tell, I'm really bothered by the current conversation in the world, in the United States in particular, about equity and equality and all of those sorts of things. Because number one, equity should not be the goal. Okay. But number two, I feel that we're constantly misplacing our interest, right? It pisses me off to no end that you have all of these companies that screw over average Americans every day. They don't invest back into their workers. They don't do any of that stuff. They just pour all of their money taking on debt and buying back their own stocks so that they can enrich themselves, and not even thinking about the future shareholders, just like whatever I can do to get the price of the stock up the most in the next year, and then I can hightail it out of here, right? But because they had a commercial that was inclusive, now I get to do the check mark to say that I am a responsible investment. Sorry, that I am a moral investment. You just have a commercial and then you can say you're a moral investment, while at the same time basically robbing everyday Americans, right? And that's where this world has gone into, right? And it comes into on this other side too, is that, like, from stats I've seen, being short is a bigger disadvantage in life than being a ethnic minority in the United States, at least. It's ridiculous. And, like, there's absolutely no reason that a guy that is short should be as disadvantaged as they are. Is just dumb, right? Why the hell are they selling the good news? I don't know. So, we're coming back into this. I mean, I held on for a long time. Much longer than I should have. You can see there I lost $20. Pretty consistent selling, right? So through to this point right here, this is about when I gave up, right? It came back to 116 and I gave up. because I said, well, I should be seeing volume continuing to come in long, and I'm not. So for all I know, it's just mean reversion. For all I know, it's just mean reversion. It's just carbon offsets. Yeah. And then the other side of this conversation that, again, just infuriates me is that everything is always taken on like the most surface level, dumbest analysis of things. It's like, okay, climate change might be a thing. Okay. So that in and of itself is like a big complicated conversation about like what is the actual impact on the climate, what are the actual causes on the climate, what are the things that you can actually do to help those things if we determine that they are actually caused by humans. Just leave all of that behind and let's just assume for a second that they're right and that we need to do something immediately to deal with the climate. Okay, none of the things that they're doing are going to help. But the reality is that wind and solar are not suitable replacements for our energy needs. They are not efficient enough, and they do not generate the power when we need it. Right? If there was some sort of huge breakthrough in battery technology, I guess we could store it, but it really doesn't make sense. Okay? So if you really want to tackle climate change, what would you do? Okay, what can you do today? I'll tell you. Invest in nuclear power and continue to grow the economy. So when you come in and destroy the economy, like they've been doing in Europe, literally destroy the economy by raising energy costs so much, making it so that everyday people are too afraid to even raise children because they're so concerned about their future. All you're doing is making it more difficult to make the productivity increases that we need in the future to solve these problems. Making the problem worse. It's crazy. It's absolutely crazy. And it all comes down to, oh, there's a problem. Well, I guess we need to use less energy. Oh, let's make it more expensive. It's just like the dumbest approach to things. And that one irks me so much because we didn't used to be like that in this country. We weren't, that was not the attitude that people had 50 years ago. I feel like that 50 years ago, people would have thought it through a little bit better. They're saving, but they're not. They're not. Like here's like that's the thing that's like so crazy about it too. It's like, think about it. The left has, for the most part, gotten everything that they wanted in regards to like climate change and even frankly social justice. Over the past 4 years, have things trended more towards addressing climate change and implementing better social justice, or further away from them? Okay, they've all gone towards those policies that Democrats have wanted, and yet has the situation got better? It has not. It has not gotten better at all. It has gotten worse, right? The amount of pollution, the amount of carbon that we're putting into the air is more because we're closing down nuclear power plants. It's crazy. Most short people aren't as clean as tall people. The water in the shower evaporates before it reaches. Okay. Carbon offsets is another one that really drives me crazy. So, you know, apparently in the 80s they did. Oh yeah, I got creamed on that trade. I wouldn't say creamed, but it was a bigger loss than I wanted. I had been thinking, I guess I need to scratch it or take the -10, and then it moved a little bit further. You know, it can happen so fast, and so I definitely got out a lot earlier than, right? It could have been so much worse. What was I, 381? Okay, so I guess I only saved myself $10. Now watch it go up. Well, the chances of it now reversing and going all the way up and beating the high are probably pretty low right now, right? But the chances of it reverting back to 30.5, for instance, could happen. I think they're very, very likely to touch that 28. Why do you think you lost the trade you did? Well, I was making, yeah. So I think there's different ways of asking this question, and I'm not quite sure which one you're looking for. The mistake I made was staying in it for too long. When it moved against me and I knew what was going on, and I was able to hold on, that was actually a good decision. But then when that happened and I was back to break even, I should have scratched it. I shouldn't have been in it for so long. But as for like, why did the overall trade not work out? Well, I was looking for continued volume to the upside, and I wasn't looking for necessarily a ton, just a little bit that I should be able to make 10 to 15, right? And I think that the profit taking was too much, and there appears to be something else going on in here selling it. So there's some other flow that's pushing the markets down in here, right? And there was all sorts of spoofing and weird behavior up in here. So I think in the end, it wasn't really a good location to play. Nah, I knew what was going on. I know I was chatting a lot, but I knew what was going on with it. Every time that it came back to the spot where I should have gotten out, I decided to give it a little bit more time because it seemed like the flows were going okay. And the reality is that as soon as I saw something that really contradicted what I was expecting flow wise, I did get out. So what is the word? The basis for the trade wasn't very good. The management of it was average. Any insights into the Bank of Canada decision? Only that there seems to be a lot of large institutional activity in the treasury market this morning, and that the market has cared more about the Bank of Canada decision than it has in the past. Yeah, it's okay. Traders gonna trade. Yeah, it's gonna happen to us, right? Well, not just meta orders, but like large bids and offers and weird stuff going on, right? So we saw at one point a 2,500 lot chase on the bid, chase price up 4 ticks. We've seen a couple of big icebergs in spots. We saw one in particular over here in the 30-year. A lot of flows that are probably related to spreads. Seems like they're active today. Yeah, so the thing I would say about CPI, if you're just coming in and kind of missed when we were talking about it just after it happened, is that, first of all, the CPI was in line. The market did react very positively to that and risk on because of that. Notice that even though the treasuries have come back quite a bit, the dollar hasn't really. But the largest contributor to the inflation number was the housing component. If it was not for the housing component, we would probably actually be a little bit below target, right? We would probably be like spot 2 in core inflation. So that really says, I think that is a really strong data point in favor of inflation is not the primary concern anymore, right? So now you have to come back to, we just had a credit event and that tightens money considerably, right? Are we so concerned about inflation now that it justifies another rate hike? I don't believe it does. But the market still seems to be leaning towards a rate hike in May. Active but mixed. Yeah, there's been trade both ways. But whoever's the seller here today is definitely one out, right? Who knows if they're done? It does seem to me that these downside flows are still very heavily correlated with the Japanese yen, so it could be more of this Japanese yen trade that's been going on. I don't know. You know, I kind of feel like I'm in the mood for trying to take another trade and looking for one, but I'm just not so sure that we really have a good setup in being able to predict the flows very well from here. Well, let's try coming over to Zero Hedge and seeing if they have any analysis of this that might tell us some things about the flows. Real wages declined for 24th straight month. Okay. Probably means the Fed is done hiking. Wall Street reacts to cooler CPI report. See, they seem to see it quite a bit different. Ignoring core CPI and the stickiness of core services, ex shelter and goods, inflation reaccelerating, the market saw headline CPI below expectations and celebrated the end of the Fed hiking cycle again by lowering rate expectations and buying bond stocks and gold. Yeah, we definitely don't want to do one before the Bank of Canada, right? We got 30 seconds for that. I don't know. Even though it does seem like there are some other people out there that are having the same take that I do on the CPI, that overall the market is not too impressed by it and is kind of moving past it now. Okay, so here's Bank of Canada, no change. So I do see a little bit of market orders long in the treasuries, but like they just felt like 4 ticks there. Like they're awfully heavy. They're awfully heavy. Market maker played it right. They didn't execute any of the buys, and when they did, they just drowned them. I don't know. I have enough information to say what the market makers did or didn't do. What I did see from the market makers is that there was some points where they seemed very, very willing to take orders, and on either side of it too. The market maker was a lot more active today, that's for sure. So I thought that was a little bit unusual. This would be a place where if I'm kind of a little bit wary about what possible informed flows might be out there pushing things, but the market makers seem to be willing to stick their neck out. Look at the spike on ES who got executed there. Well, the ES is a different issue, right? There wasn't that much volume in it in the ES. That's true. Like, there was the big spike, and then all of the volume since the open has been largely sell. Well, look at how easily they fall down there, man. Did you say the Bank of Canada are clowns? And so looking at the way that it's ticking around right now, do you see how, like, there can be like 1,000 on the bid, for instance, and then it will just all of a sudden tick up, right? So yeah, so like there, right, there was 1,000, it pulled only 206 to trade down through it. So that suggests to me that what's driving the price here in the treasury may have more to do with correlated assets than it does specific flows in the treasury market. I'm not sure if we're really getting all that much order flow coming into the treasury market at the moment. Whole world expecting higher inflation moving forward, and these guys are like, nah, we'll be fine. Oh, I don't know if that's accurate that the whole world is expecting more inflation, right? Really seems to me like inflation is not the primary concern anymore. Yeah. Oh, you know what? This is interesting. Looking at gold spiked big on the news, which, it being more dovish and thus less hawkish than expected, you wouldn't expect gold to buy. But they bought and moved lower than before the news. So that's really interesting. So now what? The inflation outlook suggests another 50 base point rate hike in May. Well, that's the ECB. The ECB has been much more hawkish than the others as of late, hasn't it? I don't know, man. It's definitely like the opinion of the market definitely seems mixed to me. But my take is inflation isn't the primary concern right now. I think the primary concern is the possibility of continued economic weakness from a large credit event and inflation sputtering out. Like all of the data that we've been getting lately is suggesting slowing growth. And I'm not seeing things that says like inflation is really getting out of control. Why would economic weakness manifest if it's not for the Fed tightening because of inflation? Yeah, I think that is probably why that happened, if that's what you're saying. So why were the PMIs and everything all weak? It's because the Fed tightening has had its impact, and I don't know how much of those numbers reflected also the market chaos that happened in March. That may not have been in last month's numbers, and maybe it will be in the next month's numbers. But my bet is that the next manufacturing PMI will probably be a little bit worse than the last one. That the next manufacturing PMI will be below 50 is maybe how I should put it. Now, interesting, this volume at 25. That does not come from before the session. No, it does not. So that is a lot of volume at 25 that has traded here. There was like the big flush down and then big flush back up. It was a reasonable amount of volume behind that. Hey, thank you. I'm glad you enjoyed the videos. Yesterday we were talking about, oh, you know, not everybody likes it. Well, we don't necessarily want to change things because I feel like I'm doing what helps the most. So. The range that I'm seeing here does seem to line up well with my estimated market maker positions. I don't know. If I were going to get if I could get a buy below 21.5, that would be optimal, right? But I really don't think that they would give that to me. I can view other people's requests. What's the request? Gotta remember, I'm supposed to talk to them tonight. Don't want to forget that. I have a tendency to forget. If Texas passes their digital currency and uses gold to back it, how do you think that would affect the price? Probably not at all. So here's the thing that I think will be interesting about, you know, if any states create their own currencies, that sort of a thing. is that currency will probably do okay. I mean, it will be a thing. I guess you'll be able to use it, but you'll have to, and it will correlate how well with how well gold is doing, which could be good or bad depending on the time period, right? I don't think that it would really have a whole lot of an impact on anything else. And that's going to be a feather in their cap. They're going to say, see, look, it works. They're going to try and use it as an example as to why we should like expand it to the larger economy, right? That's what they're going to say. But of course, that's only going to be that's only going to be the case because the majority of business is still going to be happening in the dollar, right? I'm still seeing some activity that looks like spoofing. Oh, it's on their Discord. How about instead of a bid-ask histogram, there's a bid-ask heat map? Wait, how would what you're describing be different from the Vista chart? I don't think I'm understanding that one at all. Oh, you're saying make it so that instead of showing the histogram behind my bids and ask, that I just change the color? It's not a terrible idea, it's just not super interesting to me. I'm sure that most of the requests that they get are pretty. Yeah. Okay. Testing the market there a little bit, see if they react, and they did not. Okay. So I'm starting to see a little bit of shoving again. And not necessarily my way. As soon as I thought, oh, maybe this is a good spot, the flows started being bad. Well, I shouldn't say the flow, but it ticked down. Yes, what would make the spread ratio change? Like, when would you change that ratio in your indicator, or do you keep it to what it is on the CME page? Yeah. So in my indicator, you have to set the ratio yourself, right? That page on the CME website does change. And what changes it is as the yield curve changes, the dollar value of a basis point. So basically, how much money do you make from holding a treasury when the interest rate changes? Okay. It's constantly shifting as interest rates move up and down. And so what's going on over here is like, you want it to be, okay, if I go flat, so I sell a couple of 10 years and I buy a 30 year, right? I want, you know, if all the treasuries move down, you know, I still want to be making money primarily on the spread. So you kind of have to do some math to figure out what is the most accurate ratio, right? If you're doing it over here in micros, it doesn't matter because everything is equal and you're only exposed to the changes in the rates, right? But when you're doing it up here in the full treasuries, you have to figure out the ratios. And so the CME will periodically change them. So like right now I have it 2-1. I should probably go and check and see what it actually is. But maybe I'll do that after the stream. Are those predictive of future price? I mean, no, these are things that like, so when it changes will be like when the contract shifts, right? So when we move over to a new contract or they define a new contract, then they'll set that level. So by the time they change it, you'll have already seen whatever the changes that caused that to happen. That makes sense. So I don't think that you could use it as a predictor of anything. A little bit of buying in the 5-year. Buying in the 5-year, but the spread not changing and the market kind of just staying where it was. Talking about markets that help and markets that actually move, not. Well, I still don't understand why a histogram would be any... Sorry, why doing it with color would be any different. Why doing it as a heat map would really be all that different. I'm much more interested in what the actual number is. What the actual number is and how it changes when things happen. Well, it says useful as a histogram, but if we're being honest, that's also good. There you go. There you go. I guess what I'm saying is I would much prefer that they focus their energy on a feature like spread charts, a market analyzer, quote board sort of a thing. The ability to set this up so that you're displaying one instrument but executing against a different one. And those are all things that I think they're considering. I don't know, having it as a heat map might be something that they would actually do though. A lot of the features that I see people request though are kind of like, they're not going to put it in there unless you can prove that it's like actually a thing, right? So like a spread chart, I can prove that that's actually a useful thing, right? Pretty low liquidity there at 23. They still got a long ways to go if that's going to be point of control, though, right? Yeah, 32. We've still got another 10,000 contracts to trade there for that to change the point of control. And the overall activity here just seems less. Well, there was a big iceberg there at 23. They sure seemed to react to that downtick, didn't they? They need to release an API. I don't know if that one's ever going to happen, man. So I think the difficulty with an API is that one of the big selling points of Jigsaw is how stable it is. And once you start allowing outside indicators and stuff like that, you're compromising the stability, because everybody is going to start adding these things, and then that thing crashes, but your application takes the hit from the reputation, even though it wasn't them. I mean, that happens all the time. I've seen a couple of ticks here in the 10-year in dimes. Blah. Let me try that again. I've seen a couple of ticks here in dimes that seem pretty heavy, but they just don't result in any activity at all. Well, I think I am done for the day. That also not working out, and the flow's continuing to come in short. Well, I got out of that a little bit too early. So I have to think about whether I was really a good, you know, I might take a trade just because I want to take a trade. Did I really have good reasons to try and take trades and try and play those spots? I don't know. It seems like as of late, there are a lot less situations where I'm really like, oh yeah, you gotta buy that. Anyways, there are some features missing from Jigsaw, and I do think that they're going to eventually get them. I think that Jigsaw is going to get to a spot where it's a full replacement for what you're doing with NinjaTrader. It's still selling, man. I guess we're gonna have to watch the auction really carefully today to see. You traded last CPI? Oh, I don't know. I don't remember. It's a big offer at 22. The offers on the are getting kind of thick. Yeah, it honestly just kind of makes me want to take a long break because I haven't been finding opportunities in these markets lately. I really wonder. So I'm just reading this tweet from Carl Quintilla, quoting Alliance. The CPI softness was driven by declining used car prices and a slower acceleration in shelter. The data does not provide much runway for the Federal Reserve to continue lifting policy rates after the May meeting, and it is becoming more likely that we are nearing the peak. So they are also saying, yeah, they'll do May and then that will be the end of it. And like, what is it that makes them so sure that they would raise in May? Like, how is everybody determining that one? No breaks if you, well, I don't agree with that at all. I think that there are some markets that don't provide very much opportunity for you, or that you don't understand, and that in such instances it's can be a really good idea to take a break. You know, a lot of traders go away during the summer, right? It's smart. You know, you don't do well in the summer. A little bit of iceberging at 20. Bloomberg Business. Almost 1 in 4 British parents have quit their jobs or education because of the cost of childcare. I wonder how much that is a thing in the United States as well. Where are we at here? Okay, so I just got to remember that the before the news number was 12. The cumulative delta is lower than before the news, but we're not lower than before the news in price. I'm just wondering, how stressed out should I be about what are the flows selling here, right? If I don't know what it is. This decline can't be just market makers though now, right? We're pushing the other side of this. French financial minister says, France, why would anybody give a shit what the financial minister is saying on that issue? It's at 115.12 was the before the news price, oil market CPI. We're about to get oil inventories here. Okay. Some movement in oil, but nothing too big yet. That one looked like some extended downside action in the treasuries. So my other choice here is I could try playing the flow long, right? Well, sorry, short, long rates. I could try going long rates with playing on this short flow because it doesn't seem to be slowing down. At earlier points, I was saying, well, it looks pretty heavily correlated to the Japanese yen and so forth. So no longer seems to be the case, and it doesn't seem to be related to the dollar or any of the other markets at all, really. It seems like it is somebody selling the treasuries specifically. And we are at the time where we would expect a meta order too. Oh, of course not. I was like, that's not right. Okay, so Barkin is on CNBC. Commenting, okay, so this could be a... Why do meta orders come in now? Because the liquidity is there, I guess. I've got particular focus on core inflation. There's still more to do there. Damn it. This is going, man. Well, now we're at 16. I think that Barkin's comments, I mean, maybe the market has already kind of sniffed this out, but Barkin's comments really seem to solidify that the CPI shouldn't be resulting in lower rates, right? So how much further could they go? Because I think it's very possible here now that you could end up with higher rates on the day. In other words, the dimes may very easily get to that 115.12. For now, though, it looks like you kind of had a little bit of testiness because of what Barkin was saying, and they're kind of trying to sort it out. So I tried a little exploratory trade in there. It might not be in the best spot. By the way, there was a little bit of a stop run there in the 30-year when they touched the lows. The 30-year, or sorry, the S&P 500 is cratering off of Barkin's comments here. No, I didn't have him on my schedule either. I think that he's just making a late scheduled appearance on CNBC. Usually when they're on like CNBC, that is often not on the calendars, right? I think that those things get decided last second. And man, I feel like I'm having a really hard time getting favorable excursion today, and that I need to look at where I'm entering at. It may be because I'm just chasing. No, that's not right, because this one I'm chasing, but the ones before were on limit orders. But I was on the wrong direction, right? Yeah. Thinking about the data that we get before the next Fed meeting. You're being adversely selected. I don't know. There's so much going on in the market today that I don't think that they would be so concerned with me. think there's got to be something else to how I'm doing this that... I think that I'm late is what I think is going on. Like, you can see here, like, oh, okay, I started to see like it's really going, and then so I get in, and then that's when it like mean reverts and goes dead, right? So that means I missed the move. So if I come in here to Forex Factory and I just put on the dollar, we'll look at the month. Oh, it's at the beginning of May. It's May 3rd is when the federal funds at the FOMC statement is. So they won't have the next jobs numbers yet. I guess since the guidance that we had been getting from the Federal Reserve before had been a rate hike in May, right? That the numbers being mostly in line means there will be a rate hike in May. There's that big order at 18. Of course, it pulls. I think part of my problem is that the correlations aren't helping too much today, right? There seems to be lots of cross flows and everything, but there's just too much going on for me to make sense of it. Because none of these have gotten favorable excursion. No, wait. How much did I get on this first one? 3? The most I've gotten today was 3? Really? Alright, like, that's really bad. That's unusually bad performance. I don't know what's going on. And, you know, this is coming off of, you know, not having had taken a few trades for a while, and then before that having a little bit of trouble too. Feel like I've lost a touch, guys. Spoos seem to have kind of relaxed here. I forget what that indicator is. Why do I even have that on there? Is that previous day's close or something? Yeah, it is. They're like the previous day's opening close in the AS. Well, I think I'm gonna have to work my way out of this one too. The 5-year is actually seeing a meaningful amount of buying here now after all of that. They do seem a little stuck at 18.5, but man. I wonder, 23 was where they were hanging out before, right? And then things started slipping a little bit, and then Barkin came in and said stuff, and then it really started to slip, right? And then this downside seems to be sputtering out. So, I don't know, 18.5 maybe is the new 23. Might just be stuck here for another 45 minutes or whatever. So don't know what else. I don't think I got much for you today, guys. What do we got the rest of the week? We got PPI tomorrow, right? Let's see here. This week, PPI, 30-year bond, core retail sales on Friday. Consumer sentiment on Friday. Don't know. If that was a meta order, then we shouldn't expect the next leg until 9:15. If there's another leg, which there could be, because that would be like 2 legs. If there's gonna be 3 legs, could be. I don't know. How much did we move up, by the way? Where's some from 40? 3-4? Is that really 6 basis points? 6, 7, 8 basis points? Well, I have to sit and watch this for another 5 minutes, man. This is painful. I'm seeing flattening too, by the way. Wonder if the change in the spread will be completely washed out by when all is said and done. Will be another thing to watch. Well, I'm gonna have to keep an eye on it today. Most days recently, like when I'm done trading, I just ignore. I don't even look at it until the end of the session, and then want to come in here again this morning. But seems like there's some stuff going on today, and there's still an auction that we've got here, right? So I think we have some reasons to keep an eye on it. We'll stay here for another 5 minutes. That was a pretty quick move down there in the dimes. That's in fact, that's actually really, really fast. And I'm seeing some selling in the yen again as well, by the way. So here's another thing that we got to keep in mind, is that there does seem to be some people concerned about the Bank of Japan and what they might do. And that does seem to be driving selling in the treasuries. And so one does have to consider, if something happens over there, like, does anything else actually matter, right? That might be, you know, like a really big deal that's kind of stalking us and we don't realize how important it is. Okay. So dimes are almost back to their lows. 30-year have a little bit to go. Whoa. That was a stop run. Jeez. Well, I'm glad we stuck around to see that. It's only bringing me back to break even, but hey, that was fun. And we're getting thousands of contracts selling here still too, by the way. That's actually... So from the high, we're almost negative 50 and now we're negative 70. That's 25,000 contracts net. And another 5,000 contracts net just on this fall. Interesting. There was a stack there at 16.5, but then it almost immediately pulled. More shenanigans, man. I feel like they're just toying with me. Yeah, all fake. And it seems to be like, despite my best efforts to avoid it, I keep getting stuck in the middle of these things, right? A little suspicious to me. That movement does kind of make me wonder, right? Because it was like a really easy fall to break new lows and then spoofing. Right? That really says to me that, like, there are people screwing around with it here. And I kind of have to wonder how much they could sustain further selling here. if they're using a breach of the low to play games like that instead of just keep shoving it, right? Let's get in wrong 90% of the time. So as of late, my hit rate has not been very good as it, right? Like, to not even be able to get more than 3 ticks favorable excursion in this market, in a market that is moving, right, is very odd, right? Like, I've got to be missing something really big here to be that off. They put in massive resources to take out, well, I don't know. There's been some times where it was a quiet market and I was like, I shouldn't have been participating and that was a mistake, but this is a market that seems very vengeful against me and I can't explain it. Something weird is going on. Bitcoin has been doing weird stuff too, by the way, trading a really wide range over there in Bitcoin. Well, either way, it's time for me to get going, so I'll have to deal with this after the stream. I will see you guys tomorrow, and hopefully it's a better day for us. In the meantime, stay excellent.